Okay, everybody, it's me, Gregory Mannarino. Just lovely, very lovely. Okay, so yes, Thursday, May 12th, 2022. Wow, another crazy whipsaw day in this market. And we have a lot to talk about, a lot to talk about. So sit back and relax here. At one point today, the Dow Jones Industrial Average was down over 600 points. We finished down about 100. The S&P 500 was getting smashed. We finished flat. The NASDAQ was getting punished. We finished with a fractional gain here. It's insane. Despite the fact, I want you to consider what is going on here. The 10-year yield has taken a freaking nosedive. We are under 3 now. 2.86 the last time I looked at it. I said weeks ago it would take a lot for us to go back under 3. Well, we are certainly under 3 here. Panic selling. People don't know what to do with themselves. Throwing the baby out here with the bathwater, no doubt about it. But again, look, you take this any way you want to. There are deals to be made. I made a deal today. I bought more IBM. I put this out in my free newsletter. Listen, people, please subscribe to my free newsletter. There is a link in the description of this video. I send out things all the time throughout the day in my free newsletter. It's really free. I want you to take advantage of it. Anyway, so with that said here, again, wow move here with regard to the 10-year yield. What does that mean? A lot of cash making its way into the perceived safety of debt here. Okay, the dollar today, we're talking about I don't even know if I should use the word relative strength. I'm not going to use it. The comparative strength of the dollar. Whenever I say relative, people don't get it. When I say comparative, they understand. Comparing the dollar to other currencies. It made a humongous move higher today. So this is we had a massive safety trade, which was a fear trade, which kind of unwound into some kind of almost supernatural thing towards the end of the day. Let's see, who do you think is buying here? Maybe we want to take a guess. How about it's the Federal Reserve? Yes, they have a trading desk at the New York Fed. They're going to buy the market. I have a couple of lovely charts I want to show you as well. Okay, so on the back of what I just covered here, let's look over at cryptocurrencies. Getting hit pretty bad lately. Today we kind of stabilized. Bitcoin 28,000, lovely. Gold and especially silver today got hit pretty hard. And I know there's a lot of people hating on gold and silver these days. You know my perspective on this, people. I'm never going to sway from this. I don't care what happens, okay? In an environment of hyper ballooning debt, if you cannot understand why you should be in a unit of wealth versus a unit of debt, okay? Gold and silver, these are units of wealth. And they have been so for thousands and thousands and thousands of years. So if you can't understand why you should be holding these things, despite what's going on, okay, we know what's happening with the price action of gold and silver. We understand it's upside down, that the hard asset is deriving value via the derivative. It's completely twisted. This is a rigged game. It's been set up that way by banks, none more so than JP Morgan. You know that. Look, you're all allowed, of course, to have your own perspective on this. But no one as of yet has told, and I read the comments, I asked for this earlier, no one as of yet has explained to me what they believe would be a better hedge against the hyper bubble in debt. I know there's a lot of people out here who believe that's cryptocurrencies. That is a major hedge against the debt market implosion. Okay, I believe as well that, again, and I will cover it for the gazillionth time, that I believe that cryptocurrencies have the potential to balloon with regard to their market cap at the time of the implosion of the debt market, for which we will see rates spike in an uncontrolled fashion. Bang, 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 rapidly. That's the big one, people. That's when this market is going to crater beyond anyone's wildest imaginations. An 80% sell-off in the S&P 500 is an absolute reality. And I will continue to say that in the event of a debt market implosion. Right now, the S&P 500 remains in what's defined as, okay, you can call it whatever you want, but the definition is a technical correction. The NASDAQ remains in bear market territory. How about this? If the S&P 500 hits about 3,800, that will be the beginning of a bear market for the S&P 500. But does that mean, again, look, we can define this 1,000 ways. It's a bear market. Okay, what kind of a bear market? Is it a cyclical bear market? Is it a secular bear market? I mean, we'll talk about all this when we get there, if we do get there. And again, I want to show you a chart so I can demonstrate a few things to you. So when people are out here talking about, oh, it's a bear market, yeah, what kind? What are we talking about here? Well, what is your definition of the bear market that we are? They're not all the same. They play out different ways. There's a lot of different dynamics between different types of bear markets here. And again, just because there's a bear market in whatever sector or asset class, whatever, it doesn't mean there's not opportunity here. And in my view, if you have a long enough time horizon, years, okay, you're going to come out of here smelling like a freaking rose, in my view, okay? That is my perspective. You're allowed to have your own. Market's going to zero. I know a lot of people believe that. I can't, see, a lot of people write to me, thousands and thousands, as you know that, oh, Greg, the stock market's going to zero. Well, that can't actually happen because these companies that make up the market have value, okay? So they can't go, the market can't go to zero. So don't write to me and tell me, Greg, the market's going to zero. Certain other assets could possibly go to zero, potentially, okay? But the market itself can't go to zero. It's an impossibility. I just want to get that out of the way because over the past, a few weeks here, oh, Greg, S&P 500 is going to be at zero. It can't happen. It's impossible, okay? All right, so with that said, let us move forward here. Before I show you the charts, I want to go over with you. I want to talk about I just want to bring something to your attention here. So, I don't even need this piece of paper. But the Senate today overwhelmingly, positively voted for Fed Chair Yellowstone Powell to serve another 4 years. You know why? Because he's doing such a great job. He's absolutely doing such a phenomenal job that they overwhelmingly voted this guy in. People, look, you understand as well as I do that it's not, look, I make a joke about this. I make a joke about a lot of things, and some people get kind of freaked out about it. Anyway, let's not go there. But sincerely, nothing is what it seems to be. We have an organization here, the Federal Reserve, who nobody is pointing a finger at, okay, regarding inflation, what they are doing here. But they're doing a fantastic job, and our illustrious retarded, okay, I know a lot of you hate that word, but I cannot think of a more descriptive word for that man. And I'm talking about Biden here. Talking about how the Federal Reserve will do its job. He will not ever point his finger at the Fed. None of these freaks will. And I'm going to show you a chart in just a second to back up what I am telling you here. The fact of the matter is the Fed is the government. The Fed controls everything. They are the puppet masters. They're pulling all the strings. And of course, you would expect an overwhelmingly positive vote by the Senate to vote this guy in for another 4 years because he's doing such a great job. Meanwhile, they missed their inflation target by hundreds and hundreds and hundreds of percent. They are deliberately going out of the way to create inflation. I'm going to show you a chart here that you will never see. Maybe someone should put this on the desk of Joe Bidenstein. Okay, this is a chart here, just of the last 12 months. I want you to look at a couple of things here. This is the Fed's balance sheet. This is the money supply. As a result, this is what we're seeing with regard to inflation. Just have a look at these numbers here. Okay? But, it should be obvious that this is causing this. And this, in my view, is not going to stop. If you look over here at the top of the Fed's balance sheet, it appears that we are leveling off. We'll see where that goes. Money supply continues to balloon. Now, regardless of this, I've explained to you what they already have set up. The Fed's going to continue to inflate via any mechanism whether they want to show this on their balance sheet or their off balance sheet, or the crisis to crisis mechanism. I outlined this for you, I don't even know how long ago. I said that even in the event that the Fed were to do something with regard to their assets on their balance sheet, okay, they have another mechanism now. It's called a war that's going to go on and on and on, and billions and tens of billions and hundreds of billions into the trillions of dollars are going to be thrown at that war. COVID, which is now making this big resurgence. Are you reading the headlines now? Oh, yeah. And we need to throw more money at that, too. And, of course, oh, yeah, there's a baby formula. There's a baby formula crisis that needs to be funded, just in case you don't know. So there's another crisis, the baby formula crisis, the food crisis, the energy crisis. But seriously, look. This is just in the last year. Look at energy. Look at this here. It's out of control. And I'm telling you, you haven't seen anything yet at all. What no one's going to tell you, really, is something I've been beating to death as of late. With the Federal Reserve raising the federal funds rate, keeping it lower than the benchmark, okay, there's no way to stop inflation here. As a matter of fact, the mechanism will create more. But no one's going to tell you that, especially one of the mainstream propaganda ministries. They will not tell you. Imagine they were to show people this, really, honestly. What would happen if you think people saw this? What do you think? You think people might wake up a little bit? Oh, maybe there's a correlation here. Duh! You see, but you and I are living among the retarded. They're all infected with something called retard. It's a disease process called retard. That's really the truth, okay? And it just drives me insane that you got the distractions, the deflections, the propaganda, all the misinformation, the look here and the don't look here. Oh, yeah, but everything's just great. You know that everything is so great. Now, look, before I let you go, long video, I want to show you a chart. Now, I already explained to you. Please don't get mad at me and look up the definition yourself. We are, as of right now, with regard to the S&P, in a technical correction. That's the definition of it, okay? We are close to a bear market, okay? When we get there at 3,800, if we get there, we'll go through that, we will define what type of a bear market and what we should do about it. Okay, now look. Let's have some fun. This is a 2-year chart of the S&P 500 daily. Okay, we made this insane run up. We're down. This is where we are now. If you look at this top line, there is a little support here. Okay, that's just about moving into bear market territory. Again, we'll define that. Now, if we fall here, we're going to drop further. If we can't hold there, we're going to drop to like 3,600, and then if we pass through that, we can drop further, and that would be somewhere around 3,200 with regard to the S&P. So look, I just want you to take a nice mental picture of this. This is where we stand. These are some support levels, and when we get there, again, we're right now at one, and I think it's weak support where we are right now, but let's see. This freak show market today, a lot of buying came in just miraculously. Just was a miracle. Oh, yeah. I think we know who did that. All right, look, people, I think you got it here. I think you understand what's going on and what you should be doing about it. I'm not going to change my perspective, people, because I got slammed today with questions about cryptocurrencies, and Look, you all know my take on this. I will not sell any of my cryptocurrencies at all. Not even one of them. I own like 7 different ones. I will not sell them. I am holding these things for the implosion of the debt markets, which I think is inevitable. With regard to gold and silver, that's why I'm holding them as well. Okay. I look at days like today and I smile in many, many ways because it's giving people an opportunity to buy assets. Silver is my favorite asset of all time at massively suppressed prices based on hyper ballooning global debt. With regard to this market, people, however you want to define it, that's fine. But that does not mean, yet again, that there are not opportunities here if you have a long enough time horizon. And it is very, very possible. And I know that some of you just can't handle even hearing this, but I'm going to tell you yet again, it is very possible that, yes, this year, we could absolutely hit new all-time highs in this market. There's no connection anymore at all, zero, between the market and the economy. Our economy is cratering faster and faster and faster. And this market, again, with regard to the S&P 500, we're not even in bear market territory by definition, okay? So don't freak out. But anyway, look, we got each other's backs. We always do. We're going to get through anything they want to throw at us. I don't give a damn what they want to do, okay? What's our greatest resource? Is it gold? Is it silver? Is it platinum, palladium? Is it crude oil? Is it the stock market? Is it cryptocurrencies? Is it whatever the freak it is? What's our greatest resource? What has this guy been telling you, I don't know, for like a decade? We're our greatest resource for each other. And right, wrong, or indifferent, I got your back. And I'm not right all the time, okay? This is a fact. Nobody is. But I'm trying to give it to you as straight as I can. And anyway, look, that's where we're at. Love you a lot. Please share the video. I will see all of you in the morning, and that should be fun. And tomorrow's Friday. Yes. I will see you then. Bye.